go to our software, and this is FX Solutions GTS Pro system. This is just a practice account, so I can show you how we're doing this. Okay, so right now we have, and your software will be different. And here's the thing: if you can get on whatever brokerage firm you decide to use, you can have them show you how to use the software and how to enter these trades. Okay, if you have any questions, go to our support area and send us a ticket, and we'll be glad to put together a training video that shows you how to enter trades into your brokerage firm's software. Okay, we want to make sure everybody has a chance to be successful. And yes, if you're the only customer that is using one particular brokerage firm, we'll put together a video just for you. We want everybody to be successful. Okay, so in this software, I see that here's the Great British Pound US dollar. Okay, we said to buy at 54.31. Okay, of course, for my demo purposes here, I'm writing bad numbers down because the price is already way below that. So let's go back to this original email. Hey, this is not scripted, man. This is the real deal. So let's change these a little bit here. Let's say, and we're going to change this to 5. This is change these to 3. Okay, and then this to 4. Okay, this will work now. So we're going to take those numbers, 53.82, 53.30, and 54.30 to pull a profit out. We can go into our software, and we are going to right-click in this case. I'm going to show you some of these different orders here. Actually, just click on that, click Order Selection. Now your software may be different. You just have to figure it out. Okay. Now let me show you these orders differences real quick. You have a buy market order. Okay, that means if you click that button, you're going to buy whatever the Great British Pound US dollar is. You're going to buy it at that price right now. Okay, buy entry limit is what we are going to use most of the time. Buy entry, sell entry. Okay, entry limits are what we do. We don't do market orders. Market orders means you have to be in front of the charts 24/7. You're sitting here, you find a good trade, boom, you click the button, you're in. We don't do those, okay? And we don't really do stop orders, okay? Entry orders. In other words, the Great British Pound US dollar is at 54.31, okay? We're wanting to buy at 53.82, so the price has to drop down. You understand? We're waiting for the price to drop down on this currency pair so that it will take us into a trade. That is what's called an entry limit, okay? So we're going to buy entry limit. Of course, the quantity that you'll have to determine based on your account balance and the equity management video that's in the members area that you need to go through. Okay, so we're going to buy at 53.82. Okay, and for this sake, we're just going to keep one lot. Good until canceled. Okay, unless we say otherwise. If we ever tell you if the trade doesn't happen by 5 o'clock to get out, then you can do end of day. But for most purposes, we never use that. In fact, I don't think I've ever sent out a trade signal that's ever been end of day. So it's going to be good till canceled. Push submit, and now it's going to come up to the stop and the limit. The limit in this case is where we're going to pull out for profit. So the stop is 53.30. Which means we want price to drop right now from 54.31 all the way to 53.82 so we can get in because we think it's going to bounce back up. We're looking for a bounce, okay? Imagine a basketball bouncing off the floor. We're waiting for that ball to come down, hit the floor, and bounce back up, okay? But if it continues through the floor, then we find out the trade wasn't a good trade, and we want to be able to manage our loss to a very small amount, okay? No more than 2% of your account balance, I prefer. And then the limit will be how much we want when we want to close the trade at 54.30. So what this means, let's show you this again. Current price is 54.31. We want price to drop down to 53.82, and our goal is that it'll bounce back up to 54.30, in which the trade closes out. And we made a nice, what's that, 50 something, almost 50 pip profit. That's how we do it. But if the trade goes against us, we want to make sure that we protect ourselves and close out at a position that's going to be safe for us. Okay, so that's why we put the stop loss. Okay, and at this point you push save, and that trade has been entered. Okay. All right, so let's go grab the next order. The next order says we're going to buy the Australian dollar US dollar pair at 1.300. We want a stop loss if the trade goes against us at 1.0412, and we're going to close out our profit at 1.0182. So let's go back to our software and let's enter these numbers. Here we go. Where's the Australian dollar US dollar? There it is. Okay, so we are going to sell this time. Okay, so we're going to enter a sell limit order because look, the current price at the Australian US dollar is 1.0236. Okay, so we want price to go up so we can sell. Now we're selling off the ceiling of the swing. Okay, we want to sell, have it drop down to a place where we pull out our profit. So this time we're going to do a sell entry limit. Okay, and we are selling at 1.0300. We are going to put a stop loss at 1.0412 and our limit at 1.0182. Okay, again, current price is 1.0226. We want price to go up to 1.300, right? Which we have a bounce down to 1.0182, which we're going to close out our profit about 118 pips. That's our target. But if the trade goes against us for any reason, we have the stop loss to protect our downside. Are you with me? All right, let's save that. And let's go back to our handy dandy email here. All right, so that would be it for the new orders. Okay, if you see, go back to our software, you can see we have these two new orders where I said to buy, B for buy, the pound dollar, sell the Aussie dollar. Okay, and now those orders are in. See, this has pending orders. These are pending orders now. So the next email we send you after this one, those trades will now be in the pending orders if they haven't taken by then. Okay, so the next section is going to be cancel orders. Now here we had what this means is we had previously sent you an email that said that was in new trades that we told you to buy the euro dollar at 1.2500, and here's the numbers. That trade has not taken effect yet, and now because of new market data that's come out, we've decided that we no longer feel that that trade is a good trade. Okay, so here's what we're going to do. This is very easy. We're going to cancel this trade. So go back to our software. We're going to find that trade, click on it, click cancel. Do you really want to cancel this order? Yes. End of discussion. That trade is now gone. All right. Now we'll go back to our email, and we see pending trades. Now this is a trade we obviously sent you already. You already entered into the software, but we are still waiting on this trade. Okay, and it hasn't happened yet. So you see, we told you to buy the pound yen at 1,800. And I didn't enter this already in here, but it would be sitting up here in the pending orders by the, I didn't put that into software, but it would be sitting here underneath here, already sitting here waiting. Okay, that would be a pending order. And then open trades, we told you to buy the Australian dollar yen at 87.77. You entered that trade into the system, and now it has taken effect. So if you come back here to78.77, you can see that open trades. We bought the Aussie yen at 78.77, and we are currently in this trade. Okay. So that's how you understand that. Now, usually we'll put something a little down here. Remember to follow your equity management guidelines. Folks, you got to make sure you watch that video. Make sure you watch this video too to make sure you understand how to enter this trade. The more you do it, once you've done it a couple times, it's fast and easy. If you have any questions, send us a ticket to support and we'll be glad to help you. But make sure you refer back to this video often. And make sure you follow your equity management guidelines, okay? And also, many times, a couple times a week, sometimes once a week, sometimes 3 times a week, I will put together a trade video and you want to make sure you watch it because it'll be market updates. I'm going to show you why we took some of the trades we did so that you can learn hands-on why we're doing what we do, okay? So that's it for this video. If you have any questions, contact us. We'll be glad to help you out. And hey, for those of you who want to get my winning trades sent directly to your inbox, and in 2011, we got 8,475 pips over a 12-month period. If you want to see how we can send you those trades directly to your inbox, go to the description below and you'll see the information there and you can go there and get registered for free. All right?